Hi everybody, it's Boris Lasser from BK Forex. Now, anybody who trades a margin account is at least somewhat familiar with the concept of leverage. Leverage, of course, is the ability to control a big amount of money with very little money down. Whether you trade Forex or CFDs or stocks or futures or crypto, you can put sometimes $1,000 down and control as much as $100,000 of the underlying. It's a very powerful concept, and it can certainly amplify your returns. But it's also very dangerous. Because if you think about it, just a 1% move against you in your position will wipe out your whole account. But what most people don't know is that there is a whole nother way to achieve leverage. A way that is much less dangerous, a way that is far more conservative, in a way that we do in our chat room every single day. Let's take a look at that idea of leverage in a little more detail. This is Oscar Perez Marcotte. You probably have never heard of him. He's the head of a company called Inditex. You probably have never heard of that either. But you may know the store brand that they own. He runs a company called Zara. And I'm sure if you've ever shopped in the world, you're familiar with Zara. Now, what makes Mr. Marcotte so interesting, and also one of the wealthiest men in the world, is that he completely reinvented the idea of leverage in the retail business. Because what he did was create a concept called fast fashion. Fast fashion essentially means very, very quick turnover of inventory, so that no clothing stays on the shelves for more than a couple of weeks. This actually creates enormous amount of levered power. Think about it for a second. As I said, there are two ways to achieve leverage. The normal way is you take $10,000, you borrow $90,000, and you control essentially $100,000 worth of goods. Or you could take $10,000 worth of goods and flip them over 10 times very, very quickly. And suddenly that 10,000 now becomes 20,000, 30,000, 40,000, 50,000, 60,000, 70,000, 80,000, 90,000, 100,000. And you've done that without borrowing any additional capital. You've just achieved leverage through very, very fast turnover. Now, that one single insight helped to make Mr. Marcotte one of the richest men in the world. And that is exactly the way that we like to trade in our chat room. Let me show you exactly how. So let's talk about what we do in our trading chat room. Basically, we trade anything that moves. We can trade stock index futures like NASDAQ and Dow and even the S&P. We can trade futures. We can trade crypto like Bitcoin, Ethereum, and Solana. We can trade commodities like gold and oil. And we can trade the whole FX complex. The strategy is very simple. All we do is we fade highs and fade lows. That means we sell highs and we buy lows on a 24-hour basis. This is our proprietary indicator that essentially paints dynamically fresh highs and fresh lows made throughout the 24-hour global day. So for example, in this particular case, in the Dow Jones Industrial Average in the US 30, we had just made a high. And once we've made a high, if we have the first red candle on a 1-minute chart, so the first sign of weakness on a rally, we get short. Similarly, here's the situation where we made fresh lows. And if we have a first sign of strength, the first green candle that completes, we go long. Now we take tiny, tiny, tiny little pieces of the trade. We trade with 10-point target, 20-point stop in the Dow, and then a variety of other stops and targets and other instruments, which I'll go into in another session. The point is that we do something that is very unconventional. Typically, people like to buy highs or sell lows because they think momentum is going to continue. But if you think about it for just a minute, you realize that there are three possibilities anytime a price makes a new high or a new low. Possibility one is that it continue higher. That's certainly a valid scenario. Possibility two is that it could retrace, in which case being long is going to be wrong, but being short will make you quick money. Or possibility three, it could reverse completely and go right back to the lows. So the reason why we like to sell highs and buy lows is that in 2 out of 3 cases, we're on the right side of the market. And only once in that case, we're on the wrong side of the market. So we like to put the odds in our favor, trade very, very small profits, and do this over and over and over again. But here's the critical thing. Here's the very, very important thing that we do. We don't use any leverage. We just flip the inventory over and over and over again. As you can see, for example, we have tiny little trades here. Let me just go into account history. We have tiny little trades here over and over again. This is a $100,000 account, and every trade is basically a $10 or $5 win or profit. The thing that's interesting, and in fact the thing that's kind of amazing, is that just by doing that, the money really adds up. How much does it start the account effectively at around $100,000 on 9/20th? And today, as I'm recording this, it's November 12th. So it's approximately about 35 to 40 trading days. And in 40 trading days, we have been able to make $109,000 from 100,000, 109,860, effectively almost 10%. Almost 10% of our money in about 40 days, or essentially 1/5 of a year. That means if we maintain the kind of pace that we're doing with very, very low leverage, small trades, we're going to be able to make 50% of our money without really levering up. That is the power of using high turnover for leverage versus using high credit and borrowing for leverage. So hopefully you guys enjoyed this, and I'm going to show you in the next video exactly how we amplify these trades and make them even higher probability by using the old-fashioned leverage at times when it's necessary.